Welcome to the Thoughtful Software Podcast. My name is Fahad Chokat, and joining me always is Andrew Wolf, CEO and founder of SkipList. So we believe the software industry needs a transformation. So this podcast is all about how to build incredible and thoughtful software. In this episode, Andrew and I got to speak with Manan Mehta, managing partner from Unshackled Ventures. And so we can speak to Manan for hours. It's always a blast speaking to him. He has a great, unique, and insightful take on venture capital. Unshackled Ventures is a venture capital firm betting on immigrant founders. Not all great talent comes from Harvard and Stanford, and they don't all live in New York or Silicon Valley. This was one of my favorite conversations as we get into the immigrant mindset, as well as the similarities with veterans and the work Manan is doing there. We talk about disconnect between VCs and founders and how that impacts technical debt. It's a really interesting topic. What the VC model might look like in the future, what Manan thinks about hype funding, a term we created about funding the latest trends and fads. Then we wrap up with an outlook for 2019. So here's Manan telling us about Unshackled Ventures. So we hope you enjoy.
Really simply put, we invest in immigrants and we sponsor their visas. We invest at day zero. We are what most immigrants don't have access to, and that's friends and family money. Not surprising by definition. If you're an immigrant, you probably came recently, and you're probably here on your own. And so this idea of friends and family funding doesn't really exist. And add on top of that, not deep networks. It's important that we support this talent population, and we get in at ground zero, and we lead our investments. We lead 90% of our investments. We're investing out of our second fund, which is a target $25 million raise. Our first fund was $5 million. But our idea is that we're going to help immigrants succeed faster by being their friends and family round and putting an institutional spin on it.
Yeah, that's a really cool spin, because I think it's like for the top 5 companies, basically most of the FANG stock is people that are immigrants or from immigrant families. And like, one, if you just look at it from that perspective, it's crazy to see most of the big tech. I actually think it's even larger than that. Most big tech companies have at least one immigrant founder on the team. So that's really cool, and definitely something that's needed, sorely lacking even. So I'm glad there's someone in that space.
Yeah, no, it's been a lot of fun for us. I think what we really think is that there's a very large population of untapped talent in this country. I think the most common similarity you can draw on, since you are in Cleveland, and sounds like we're all sports fans here. Right now, I think the venture game, most VCs act like GMs of basketball teams that only recruit at Duke and North Carolina. That's the equivalent in venture of Stanford and Harvard. I don't think that's how returns come. I don't think that's how you build a winning team or a winning investment. And so we get a lot of our inspiration around, what other GMs and other organizations have done, which is you'll see that oftentimes with, companies like, or teams like the New England Patriots, historically the San Antonio Spurs, and honestly, outside of Kevin Durant, the Warriors. None of those guys went to a big school. They were just the best talent within their class, and they did what they had to do to work hard, and that's what we think immigrant founders bring to the table as well.
I actually find not immigrants, but like people in the Midwest, we're part of the forsaken flyover country. Every time I hear that term, it gets me angry, because there's so many talented people here that move back to live with their families. I'm one of them, right? I have a top 5 tech degree. And yeah, there are no really good jobs here. I can't work at Google. I can't work at Microsoft, but that opens the opportunity up for me to have to create my own opportunity.
That's right.
and out of necessity. So I've created a lot of good businesses where I've got to work on a lot of cool tech, and we've produced a lot of great things here in Cleveland. And we're producing another company, and it's rewarding because as you work with these people, you realize that they have all the right values, just like immigrants. They care about family, they care about hard work, they care about getting the job done. It's not about ping pong, it's not about kegs, it's not about all of this fads. It's about actually building something amazing. And when you have that and you get a culture like that, you can move the world. And that's why we started in Cleveland. That's why we're still in Cleveland, and why we'll be in Cleveland our entire thing. And we're recruiting in places like Kansas City and Pittsburgh and Detroit, right, where people aren't investing, but we will, and we'll get really great talent, and it'll give us a competitive advantage over the other companies.
Yeah, no, dude, I think that's exactly how we think about the world too. If you look at our portfolio, what you can find about it, you'll notice investments in water infrastructure, oil and gas, on-demand manufacturing, logistics, elder care. These aren't Silicon Valley, New York type of businesses. These are American trillion-dollar industries. And most of those customers, the Fortune, I think, 90% or 75% of the Fortune 1,000 companies are actually in the Midwest. They're not sitting here on the coasts. And I think it's time Silicon Valley recognizes that this next generation of innovation is not going to come from application software. It's going to come from real tech innovation within some of the hardest, most American, quote unquote, industries. And it's not surprising that we have, people that our founders are flying to the outskirts of Tennessee. We spend time in Youngstown. We go to South Bend. I was just in Wisconsin last month. I'm going there because I think that's where you have immigrants graduating from University of Wisconsin, Georgia Tech, University of Chicago. They should stay there. They should stay there, build their companies there, hire talent there. Because at the end of the day, that's the difference maker, right? Is who knows who. And I think we're walking into that world where that's going to matter more and more.
I always laugh, like Amazon did their thing where they're splitting between two cities, and they picked DC and New York's the rumor, and they announced that, I'm sure, because they couldn't find enough tech talent in one city. And I laugh because I'm like, there's plenty of tech talent in one city. If you look at Chicago or a Madison, Wisconsin, or an Atlanta, and you can find it there if you look and you're willing to actually meet the people and grind and find the right people. There's like Cleveland. I'm not going to say we have as much talent as Silicon Valley, because we don't. But there's two things we have here. We have work ethic, people wanting to learn, people wanting to grow, and we do have hundreds, thousands of really talented developers here that you can tap that are untapped because no one else is here.
Well, let's also be clear that the Silicon Valley definition of talent is developers. Last I checked, business is always a business. It's sales. It's support. So you can't just think everything's going to happen inbound with inside sales reps and there's no fee on the ground. There's no customer success. Most of these companies aren't going to buy from a guy or gal that's 25 years old that all they know is how they got to work was on some scooter and they code until 2 o'clock in the morning. That's not what business is made out of. And I think we have to recognize that there's a huge opportunity to think differently. And it's going back to my metaphor earlier, everyone thought that you had to be a physical specimen to dominate the NBA. Welcome to the world of Steph Curry and Trae Young.
Yep.
Yeah, I would take Steph Curry any day. So do you see that immigrants approach these American problems differently? Have you noticed any unique perspectives that they bring?
Yeah, absolutely. I mean, I think this is where you need orthogonal thinking to solve problems, right? So if you look at my founders' backgrounds, many grew up in small villages without tons of access to all the resources. So when they come off and start a business in the water infrastructure or industrial water treatment facilities, they had to find a way to get water from the well growing up. And they had to find the most economical and efficient way of having water every night for drinking, let alone forget about showering with running water. And so when that happens, you just don't look at the problems linearly, right? It's not, if I do this, then that. It is, I'm going to do this. I'm going to watch how they react back to me. I'm then going to modulate what I do next, then see how they react back to me, and then keep on iterating. I think what we call that in the venture space is rapid iteration, but that takes a hell of a lot of adversity muscle to tolerate it, because it's hard. And I think that's just an unfair advantage, which ultimately gets called American grit, right? American grit is effectively people with incredible adversity muscle. It's not surprising that I see that oftentimes starting with the immigrant population.
It's amazing in the American grit thing, right? Was just discussing this with somebody about most of the people we say that had American grit were actually immigrants coming away from old country. And now you see a lot of people from China and India, and they come here and they have grit because they have to have it. And even less so in America, people have such cushy lives, and they grow up in a middle-class family in a middle-class suburb, and they don't really have the same grit. They have access to resources, so they're successful, right? Like if your parents can pay for Stanford, I'm sure you're going to end up a millionaire because you're a millionaire to start with, probably. But if for me, I come from an adverse background and I have that grit of like, well, giving up's not really an option because I don't have a fallback plan. So this is the plan and I have to make it work, or what do I have? And the same thing I see with immigrants, same attitude. They don't have a fallback plan. It's not like they can move back to their parents. Their parents are 10,000 miles away in a different country.
And many cases, to be clear, these immigrants are sending money back to their parents as well.
Yeah, right. And I know a guy, really good friend of mine here. He's from, his parents are from a small village on the Pakistan-India border, and he sends money back, and he eats like ramen every day. He eats like crap. And I told him, like, dude, I'm sure your parents would be appalled if they saw how you're eating right now. And he's like, but they're eating well, and that's the important thing. It's a completely different mindset than the way Americans live.
Well, what's really funny about it? We've done some work with the veteran community here in the U.S. And the reason why we do that work is not because we're trying to be patriotic. That's important, don't get me wrong. I'm born and raised in the U.S. But it's a lot more about personality-wise, discipline, work ethic, adversity. Those characteristics are very similar between the immigrant population and the veteran population. And as a result, there's a discipline on how to get things done. Both people, as you just described in your example, immigrants will never leave a family member on the battlefield. They'll never leave them by themselves. It's obviously the same case for our veterans. And it's not surprising that we have a few teams that have teamed up with their head of sales or their co-founders that are former military personnel, because I think from a personality perspective and just an overall work style, you see a lot of parallels. You also obviously see that within the athlete demographic, because for many athletes, sports is the only way out of a very challenging life. And so, there's a lot of money that goes into it. So I think there's certain personality traits that I think set you up for the zig and zag journey you're going to be on as an entrepreneur.
It's funny. It's funny that you brought that up, because I didn't think we were going to talk about it, but quite a few people at Skip List are veterans, and and it's really interesting. And Andrew can touch on it a little bit more, but what I noticed though is one thing that we're not touching on is there's great work ethic and grit, but there's also a very high level of quality of work that's produced from these types of people. And so I see there's just so much bad software out there. So many bad businesses, but when you kind of put this all together, you see that the level of work is just so high, and it's really good to see that.
There's a lot of self-respect within these communities, because oftentimes everyone else has told you that you may not be so-and-so. You may not be good enough. You may not be strong enough. You may not be fast enough. You may not be smart enough. And so all you got is your self-belief. And when you have a lot of self-belief and a lot of self-confidence and respect for yourself, your product of your work is never going to be poor. it will only be limited by what you know, not by how much work you put into it. And I think that's really important to realize, and that's what I think makes these populations such strong contributors.
Yep, we have 3 veterans of our team, our co-founders a veteran, and you're absolutely right. The quality of the work, the attention to detail, discipline to get things done, definitely come from there. But the team mindset is what matters, right? Software is a team sport. I think a lot of people leave that down. They see the lone genius, the guy in his basement is hacking, and those people do exist and they're wonderful. But really, that gets you 0 to 1. It doesn't get you to 100. It doesn't build a great business, as you mentioned. Teamwork does that. And I find that veterans are willing to put themselves or their team before themselves. And that trait alone pays dividends every time it shows itself. It's incredibly huge. And immigrants, same way, different mindset. Americans tend to be more individualistic, and other societies put their culture, their people first. And I think that shows too when you look at teams.
Well, it's really funny, right? I made this observation when I was traveling abroad, and I've had the fortune of traveling a little bit around the world. And one of the things I started picking up on is the farther east you go in the world, the less they're concerned about personal space, which is conversely said, the farther west you go in the world, the more they care about their own personal space. And so you'll see that as an example when you're walking down the streets of Vietnam. Someone bumps into you, they're not going to apologize and stop and say, I'm sorry. And nor is that person that got bumped into going to get up in arms and get mad about it. They're going to move on with their life and say, not a big deal. In fact, it's a non-event. Versus here, we need our acre land. We need our space. If anyone cuts you off and they're within 7 feet of your car, you're probably going to flick them off on the road. And it's just a very different approach on how people then collaborate, because they're always forced to be around people and they know they can't survive without people around them, versus very individualistic here in the US in a lot of ways, that I'm going to do it on my own. I don't need you, and get out of my way. And Daniel Coyle writes books. I don't know if you're familiar with him, Talent Code and the Culture Code. The Culture Code talks a lot about Greg Popovich's leadership style on how he has, really worked with a lot of foreign talent as well as domestic talent, and what he does to effectively create an environment of trust and safety. And that's how you get the best out of every single talent. And so there's a cultural element that I think is really powerful here within those 2 demographics. Again, the immigrant population and the veteran population. There is nothing about themselves. They are long on ambition, short on things to lose, and they know that everything they do is a team sport, and they are going to be reliant on the resources around them.
Man, well said. One of the many things that bug Andrew and I about like the startup culture is, as startups now try to raise rounds and go to the next round, there's not a lot of discussion around the tech stacks that some of these companies are building. And it's horrendous, and it's almost insulting the amount of bad software that's being built just to get to the next round. And so I think kind of the theme of being thoughtful and building software, and even kind of going back to our earlier discussion of where, you have immigrants and you have these veterans, and there is a sense of quality. Do you see any kind of change that's happening within the startup culture, or is it always going to be just kind of these particular people from these certain backgrounds might build better software or might be more concerned about higher quality?
So I think that's an interesting question, because I think it's got a lot of nuances to it. And honestly, I think there's something to be said about usable software versus perfected software. One of the benefits that we have now as a society is a lot more software development is going open source, or there's libraries that you can leverage, which allows you to move a lot faster and put the software into a usable format. And so what I think about as a VC specifically, and again, given my stage, which is very, very early, I'm not looking for perfection in software. I'm not looking for even the highest quality, and I'm okay with a little bit of technical debt in the interest of really validating a usable software that someone will pay for. I think for me, it's more important what's their willingness to pay. And I tell founders all the time, your goal is to identify what their pain point is so you can build the least amount of technology for the highest value. And so when I think about the software development stack, I do believe in the early days, you are going to see more technical debt, which I think implies that maybe it's not perfected yet, and it's kind of broken in a few ways. But I do think as you get to scale, this becomes a major problem. And I think there's something between the seed and Series A round of funding, using Silicon Valley kind of terminology for what we define as seed and Series A, that I think you're seeing companies now realize that they need to put the right architecture and infrastructure in place to scale their platforms. But the reason why they do it then versus earlier is I think they want to first validate someone is willing to pay them for it.
So I see it a little differently, coming from a tech background myself.
Yep.
I see these people maxing out their credit cards, aka technical debt, and then going back to their investors saying, well, look how much traction we got, and asking for a larger credit card, and they get it, and then they max it out again, and then they're like, oh man, now I need a $3 million limit, and they're continuing to pile technical debt on technical debt and technical debt. And then what happens is this pile of technical debt can't be paid off, and so they do these rewrites, and the rewrites fail. And there are some companies, like Uber and Lyft, they tend to have been able to pay that off as they go, but they're also the exception to the case because they've gotten so much money that they were able to scale their teams really fast. But I see a big trap here of all the startups I've audited where they go to their Series C and their code base is, and there's nothing wrong with monoliths, so I'm not going to crap on monolith architecture. It's perfectly good. But you see these spaghetti code monoliths that they won't work for an enterprise level team, a team of more than 20, 30 people for software development. And I see people pushing, investors on boards pushing CTOs to make the wrong decision. Like, oh, just build more features, build more features, build more features. We have to get to that Series A. We have to get to that Series B. And I've been on the receiving end of that, of like knowing I'm doing something incorrect. We should slow down a little bit for the sake of just getting to the next round. Have you been on board? Obviously, being early, you might not see that a lot. You might get bought out before the Series C or the Series B, but do you see that when you are on the board and you're advising?
Yeah, you certainly see that. And honestly, I think this is not always a bad conversation. And the reason why I say that is I think, end of the day, everyone's trying to move as fast as they possibly think they can. And I actually think these are conversations that are healthy, where at a certain point, investors and founders don't see eye to eye, and that's part of the importance of surrounding yourself with people that you may not see eye to eye with, because it challenges you to think differently. And what I actually think is more important here is if you do have a board member or a VC that thinks they know the technology stack, that was a former CTO of a large enterprise company, and can bring that perspective, I think you'd put more credence into that person's voice than the financially motivated VC that all they've ever done was sit on boards and give you anecdote after anecdote on how their other portfolio companies did, but were never a CTO themselves. So I think you have to always take
and that's one of the things that I want to get into is helping advise startups. As a CTO, I get to see, have a unique perspective. And I'm not saying the conversation's bad, and I don't want to imply that. It's founders for startups and probably tend to be on the younger side. I think the average age for a founder is like 28 in a tech company. And so they don't necessarily have the experience to push back in that conversation, and they don't realize the power they may have. And so it's almost feels like a one-sided conversation. If it happened today, of course, I would be able to have that level-headed, even conversation that it should be. But in some cases, the power dynamic is such that they don't feel like they have a choice, or that it's a conversation and not just someone that's given them lots of money and now they need to listen and answer to that person.
Well, I think you're actually hitting on something bigger in general. And that is the disconnect between VCs and founders as a company moves on, and what are the various perverse incentives that everyone needs to hit, right? VCs know they're not going to see realizations or exits for a very long number of years. So all they can do to survive is raise more money as a new fund so they get their management fees. Well, the only way they can do that is if they keep on showing markups in their existing portfolio. The only way to get those markups is to create increased value. And so it's not surprising that they put these artificial, what I call artificial milestones and targets in place for a lot of their founders. And this is what I think differentiates great VCs versus bad or average VCs, is their recognition that their fund cycle is not what matters here. And I say that it's fairly obvious that you say that, but I'll tell you right now, most VCs have no fucking clue that they even think that way. Because they know that by the time their first fund maybe gets an exit, where they have something called a DPI, that's a distributed to paid in value, that means they have an exit, they're probably going to be already on fund 3 or 4. And the only way they get to fund 3 or 4 is if they showed markups in their earlier funds. It's really hard to be patient in VC for a lot of VCs. And I think that's the bigger issue you're alluding to, is the disconnect and motivations, because at the end of the day, a VC is simply a money manager.
Yep.
And they're out of business if they don't have more money to manage.
And I find that really interesting. And it, a topic we want to discuss today was new models for VC. How do we prevent that perverse incentive from happening? We're seeing things evolve every day. I'll tell you one that I saw recently was someone investing in buying basically profit sharing stock in the company, and they give you $100,000 and then they expect 8 to 9x multiple on that. So maybe you pay them $900K and then they just take off from the profits after a reasonable amount. And they try to fund profitable companies. Not everyone can be Google. So if you're running a Basecamp is a great example of a very profitable, very good SaaS company that if you can invest in would be great to get profitable multiples on your money. And then once you pay them $900K, you buy back your equity stake. And that's how they do their investment portfolio. And that gets rid of a lot of perverse incentive, because now they're trying to drive you to be profitable, not just a higher valuation of the company. Do you see any other models in your space that are evolving that help get rid of that, like you said, perverse incentive, where VCs are going after their ends, but founders are trying to build, obviously their idea, their dream into the world?
Yeah, so I think we have to also remind ourselves that venture capital represents only 3% of private sector funding. So it's a relatively small capital base, but I think in a weird way it has the loudest voice because of companies like Uber, App Dynamics, Lyft, WeWork, who have been funded by VCs and ultimately became private equity plays. But I think what you're seeing is, Chamath, the founder of Social Capital, wrote a very interesting piece on how he's creating a holding co. that he published a few days ago. I think it was last Friday or October 31st.
He had some interesting comments on the VC model, right, or startup community, right? Something about like a Ponzi scheme, or I forgot what he said.
He alluded to the inside baseball of Ponzi scheming, which, there's a reason why a lot of funds have partners that roll off and start their own funds, and then they all become co-investors. It's just a more sophisticated scout model, right? It's you scratch my back, I scratch your back. I'll give you access to this deal. We'll mark it up together. I wouldn't put it past that it actually happens. And so Chamath's obviously taking a different approach, and this is a function of him having, probably $1 billion of his own, which is interesting to see what he will do.
You can say what you want when you have $1 billion, right?
Yeah, it's hard to fight him. But then you have people, that are doing, more studio models, right? Where they're underwriting all the company through Series A, providing all the capital they need, and effectively bringing in people as executives for a smaller capital base. And then you got an organization like Village Global, which is funded by primarily Reid Hoffman and the big names of Bezos, Zuckerberg, Gates, Sarah Blakely, and a few other folks. That is taking on a much more of a, we're going to find the untapped talent, we're going to give them a small amount of money, and then fundamentally leverage our brand influence to put them into great situations of success. So I think what you're seeing more than financial changes, I think you're seeing business model changes on what kind of services you have to provide entrepreneurs to make sure they're successful. At the end of the day, the math has remained the same, where typically 1 in 10 of companies are going to even become positive. 1 in 100 will return the fund multiple times. And so, ultimately you have to ask yourself, if that's the venture game, which represents 3% of all the funding out there, how much can you really change it when you're looking for outliers?
Well, what do you think of what SoftBank is doing? Basically have this huge, gigantic fund and, pouring in so much money into the community. Do you see more models that are similar that might happen?
I don't have much of an insider perspective on or any kind of firsthand knowledge of what SoftBank's doing. I do know that they are effectively creating the public markets for private companies. They're creating the liquidity needed for a lot of these venture investors. And so it's not surprising that they tend to be backing or tend to be partnering with the largest firms or VC firms in the country. I wouldn't be surprised if Chamath were able to name names. He would name a few of those names, including SoftBank, on how they're playing the inside baseball game. But I don't personally know much to have any credibility on the topic.
One thing I noticed too was like 8VC and other VC firms have started hiring developers, internal developers for within the company itself. What do you think that model looks like, and what is it that they're trying to accomplish, and do you think it'll be successful?
Well, you can thank Mark Andreessen and Ben Horowitz for the imagination that now comes out of VCs to find ways to add value. I think portfolio services have become the standard if you want to stay in business. And hiring developers, UI, UX people, data analysts on your team that can now support multiple companies within the portfolio will become the norm. I think it's almost the verticalization of venture capital, right? Everyone wants to verticalize within business segments on what they can do. It's effectively their way of saying we are going to become specialists, and we're going to create economies of scale using our management fees, and that's how we're going to differentiate ourselves. So I think you're going to see more and more of that. I think that's just a requirement to be a VC, to win deal flow. But I really think that started with Mark Andreessen thinking about what he learned from William Morris Endeavor, so WME, the big talent agency down in LA, on how they were thinking about, talent scouts and what he could do similarly within the venture landscape. So I think it's a good thing. I think it's putting the onus on VCs to provide more value than capital.
Well, let's talk about like hype funding, things that, we see are hot in media, and we kind of made that term up, hype funding, like blockchain, for example. And like, where do you kind of fall into some of these new technologies that are coming out and seeing maybe too much investment?
You just said blockchain, Fahad, and the value of this podcast is now at least $1 billion. All right, I'm not accepting a cent less.
Blockchain podcast.
Look, I think there's, we probably can't say this enough, but VC is a speculative investment vehicle. It is way more about the future than it is about the past. The past simply provides you guardrails and maybe some patterns to understand, but VC is about what's going to happen in the next 5, 7, 10 years. And so when new technologies emerge, whether it be Kubernetes, Docker, blockchain, what AWS did for hosting, and what you're seeing, now happening with the mobile phone and adoption and consumer and supply chain. All these things are really a response to why now. And there's really compelling arguments. And what VCs don't know is which one will work. And so when VCs don't know which one works, and they don't necessarily know enough about the industry, all they can do is play the speculative game of, I got to be in every one of these companies or I'm going to miss out.
Obviously blockchain's easy to pick on because the ICOs and the amount of money that went into that. Like, people were putting blockchain in front of their company to get like $30 million more valuation. Like that stuff is silly, of course. Let's talk about one that I thought is just so interesting and near and dear. It's like AI. I remember having an AI company not too long ago, and people wouldn't throw money at us, but the minute we wouldn't mention AI and we wouldn't get a meeting with a VC. We mention AI, we get a meeting. And ultimately, it didn't matter what we were doing was possible. It mattered that we were leveraging some exciting tech. How can we as technology people, right? So like at the end of the day, I'm an engineer at heart. How can I help VCs understand the tech better and say, okay, an AI that helps you schedule meetings is probably doable in 2018, but an AI that helps you write code is not? Sorry, how can we as a space help you understand the tech better so that like there's less, I guess, silly money thrown around?
Well, look, I mean, I think end of the day, you're differentiating between what's a good source of capital and a bad source of capital. And founders need to know that there's going to be people that VCs specifically, that don't want to do the work, that read headlines and make investments. That onus ultimately has to fall back onto the limited partners that invest in these funds, because they are the source of capital. And so, ultimately as a founder, I only encourage one thing: use the technology that gets you there faster and more efficiently. And the reason why I say efficiently is because that does sometimes mean it could slow you down, but be higher quality. And so, one of our founders has authored 9 books on artificial intelligence. And so whenever we see an AI for X, AI applied here, we kind of chuckle. We send it to him, and he'll usually tell me that's not AI, that's open source libraries that's doing simple pattern matching. I'm like, oh, okay, thanks. But that's because we've realized that AI for the sake of AI doesn't make any difference. It's applied artificial intelligence that requires and acquires a unique data set is where the promise of AI starts to show up. Because AI is only as good as information it can capture or analyze. And so I think it's becoming, more and more important that investors, before they make investments in new emerging technologies, at least surround themselves with people that understand them on what are the pros and cons and what are the limitations of it. Today, I still see companies that say AI in healthcare or AI in drug development. I chuckle. I go, there is no AI here yet. We don't have enough data that everyone has access to understand it. What you're talking about is simple cluster analysis. What you're talking about is pattern matching. That's okay. I'm not saying it's wrong, but call it what it is. Artificial intelligence is a very bloated statement. So we tend to want to differentiate between them a little bit. We ask, is this machine learned? Is it neural nets? Is it just using open source libraries and creating a nice GUI on top of it? Those are all okay. Just we ask the harder questions to make sure we're not getting put the wool over our eyes.
So let's do a final thought. One of the things we always like to talk about as we kind of wrap up the year is, what are some of the trends you see for 2019? Could be anything related around funding or technologies. Just kind of what's on your horizon.
Yeah, so I think I alluded to it earlier, but overall, what I'm personally really excited about is that I think the application era is slowly coming to an end, where you have Uber for X, you have business model innovations, you have changing in in structure, and there's the gig economy, there's 1099s, there's W-2s. I think that stuff is slowly hitting a saturation point. I think what we're starting to see is a incredibly interesting technological revolution that's about to happen. I think the power is going to go back to the hardcore, vocationally built and interested technologists. So whether that be in things like cancer treatment, in gene or cellular therapies, whether it be in decentralization, communications, global warming and sustainability, I think you're going to see technology now emerge as the most interesting thing people are now investing in. And as a pre-seed investor, that means before everyone else figures it out, I have to make a few of my bets. So we're doing that right now. We're betting on really, really hard technologies that we believe, given 1 or 2 years, they will hit that market inflection point, and we'll start to see more business adoption. But I do believe that the mass market is going to start figuring it out in 2019, that the application era is slowly coming to an end, and technologists will reign as the most likely to receive funding going forward.
Obviously, Skipless is founded on the exact principle of hard tech being the future. A lot of people are still using World War II tech, and we need to get people off of that, and that's the whole reason we exist. We see that trend as well, and finding out how we can help the world move forward via technology, especially in the next 2 or 3 years. It gets increasingly critical as our politicians and our leaders continue to fail us and not invest in things that like global warming to help slow it down. So we're going to have to do that ourselves, and I look forward to the challenge of solving these hard problems with great business people and great businesses.
Yeah, I would encourage anybody that's feeling down and out about the innovation cycles of this country, just go to one of the top 250 universities in the country. It'll fire you up. There's some really interesting things going on now on campuses, teaching 18, 19-year-olds all about gene therapies, growing new plant-based proteins, creating new feeds, lab-based meats. There's a lot of stuff going on that's hit the market a little bit, but there's a ton more coming when you think about materials and plastics and global warming and emissions. Just go to universities, and you'll start to believe that in the next 10 years, we're going to see some pretty kick-ass stuff that's going to make us think about the world a whole different way.
Oh yeah.
Yeah, I see a lot of interest, or a big trend around social components. Like you said, like even companies like Impossible Foods. I think we've had that. That's delicious, and so there's going to be things like that for the environment, and it's going to be really exciting. That's what I'm most excited about for 2019.
Thanks for listening. You can always connect with us at skiplist.com.